Let's bring in Marc Lasry, Avenue Capital Chairman and CEO, along with our very own Leslie Picker to kick things off. Leslie?
Kelly, thank you so much. And Mark, thank you for being here. Really critical day to get your perspective. I know you're joining us from the iConnections conference in Miami, so we appreciate you taking the time. Just want to kind of level set with you for a second, if we can get a sense of where your head is with regard to the key drivers of some of the volatility we've seen recently. Is it sentiment? Is it technicals, fundamentals that's causing some of the whipsawing in the markets?
I think it's a mixture of all those things. I think people are nervous about what the Fed is doing. They're nervous about the economy. If you sort of think about what's really happened, and I don't mean to simplify it, but really what's happened over the course of last year is, if you think of where we were last year, you were having $3 trillion that was going to go into the economy from what the Democratic plan was. And at the same time, you had the Fed that was loosening money. And where are we today? We don't have that $3 trillion going into the economy, and the Fed is tightening money. So investors are nervous about that, and that nervousness is actually positive for what we try to do, which is, where we're lending money or trying to take advantage of situations.
And I want to get more into that in just a moment, but quickly to circle back on your thoughts on the Fed, do you think that the market's getting ahead of itself here? There hasn't been any news that it's actually reacting to, or do you believe that the Fed put is effectively kaput at this point in time, and that's what they're nervous about?
Yeah, well, I think investors, everybody's always trying to figure out what the Fed is doing. So the Fed has said that they're going to raise rates. And everybody, and you had the prior guests talk about how they're pretty confident rates are going to get, you're going to have 3 rate rise at least, 75 bips. The thing to remember is, even with all these rate rises, you're going to have, rates that's still lower than 2%, which is actually pretty low. So I think as the economy starts getting, if things start coming down, in other words, GDP, I don't know if the Fed will keep doing what it's doing. The Fed is very focused on sort of what's happening in the economy. There was too much money. That is, you're having money taken out of the system, and that's going to have an impact. How big of an impact? I don't think any of us know, but right now, I think the market is overreacting to that.
Shepard Smith here. Thanks for watching CNBC on YouTube.